Hi, good afternoon, everyone. Sorry for the slight delay there. We were just getting our panelists on the audio. And I'm Max Shenker, Vice President with Tax Credit Co. here in Los Angeles. And we have with us today our guest, Evan Migdail with DLA Piper in Washington, D.C. And this afternoon, we are on the verge of possibly passing one of the most consequential extender packages in many years. It's not quite done. We unfortunately couldn't time it perfectly to the moment that the bill was introduced, but we're hoping that today, in our discussion with Evan, he'll give us an update on exactly where things stand and hopefully a good idea of where things are going to be going over the next few days. Evan, thank you very much for joining us today.
Sure.
Maybe you could just start with a brief overview of where we are.
Sure, happy to do that, Max. If this call was one day later, I think we would have some definitive information to give you. Otherwise, we are working off of some fragmentary information, but I think fairly reliable fragmentary information. Essentially, about 3 weeks ago, congressional leaders and the president began a negotiation that looked a good bit like a negotiation that took place a year ago. The core of the negotiation was to try and make one or more of the tax extenders permanent, while also making permanent changes that were made at the president's request in 2009 to the Earned Income Tax Credit, the Child Tax Credit, and the American Opportunity Tax Credit. Essentially, those latter programs are social programs through the tax code for individuals. The negotiations had some rocky moments. But within the last 48 hours or so, it has been reported that they are moving towards a successful result, it seems. And as we understand the parameters of the deal, the research credit and the Section 179 expensing limits, higher expensing limits for small business would be made permanent on the business side. The president's changes to the social programs would likely be made permanent on the individual side, and then a number of provisions would likely be extended for a 5-year period. Among those, we believe, based on what we heard just a short time ago, would be 2 international provisions, and most likely, although I don't have confirmation of this at the moment, the Work Opportunity Tax Credit. Other provisions that are in the extender package would be extended for 2 years, and that would be retroactively for this year and going forward for next year. Another provision that would be made permanent, would go into the 5-year basket, would be bonus depreciation, which would be 50% this year and next, but then it actually would be phased down 40, 30, 20, and then eliminated in 5 years. The total cost of the package is somewhere between $560 and $700 billion, and that causes part of the uncertainty we have at the moment. My understanding for the last few days has been that a $700 billion amount was too much, that congressional leaders felt that would be very hard to sell, and so they've tried to pare it down to be closer to about the 550, 560 mark. But I don't know that with certainty, and the negotiators may not either. My understanding has also been that the Joint Committee on Taxation has been scoring the proposal, which means they're attributing a cost to each element, each component, and they're still working on that, and depending on where that is, they could make modifications to reduce the cost, which means that some of these things might not be extended as long as Congress might otherwise wish to do, and so they haven't finalized the process. Other outstanding issues are there has been a dispute over whether the Earned Income Tax Credit and the Child Tax Credit have a certain level of fraud, a certain level of undocumented immigrants claiming those benefits, and Republicans have suggested some provisions to clamp down on that alleged fraud. That's a very tense area with Democrats who do not believe the programs have those kinds of problems, and so one of the things we're hearing is they're still trying to nail down what to do about those provisions, which are in the euphemisms of Washington, D.C., are actually called program integrity provisions, but they're still working on those. We understand that about at 5 o'clock, Republican members will get a briefing on where this tax bill is. They will also get a briefing on where the spending bill is. Absent a new spending bill, funding for the United States government will run out at midnight tomorrow. My guess would be if agreement is reached both on the spending bill and the tax bill, that Congress will extend the deadline for a few more days, and in order to accommodate a final vote on these packages. The other thing I would mention, I believe, but again, I am not absolutely certain, that in addition to extending WOTC potentially for multi-year period, 5 years we hope is going to be the case, Congress will also add a new category, and that is a category for people who are long-term unemployed. That category, you would qualify for that category if you had been unemployed for 27 or more consecutive weeks and had received federal or state unemployment benefits for any period of time during the 27 consecutive weeks. That provision has been both in the House bill that Mr. Brady proposed, just a 2-year extender, and also in the Senate bill that the Finance Committee produced in the spring, and we think there's a lot of support for it. So essentially that's where we are right now. Maybe I can take a moment just to give you an idea what will happen with this bill over the next few days. Congress right now, Congress wants to get out of town as quickly as possible, and I don't blame them, and I hope they do pretty soon. But in the interim, they have to pass these 2 bills. They are both very important. The intent here is for the House to go forward first, which they pretty much need to do. Their constitutional responsibility is tax and spending bills originate in the House, which is why the House leadership is going to brief members in about an hour as to where they are. The belief here is that on the House side that the spending bill, which we also have not seen the text of, is likely to be carried mostly on Democratic votes. The reason for that is that the spending bill spends money under the higher spending limits that were negotiated by Speaker Boehner as he was leaving office, and only 79 Republicans voted for those limits. The spending bill is the bill that spends that money, and a great many Republicans who didn't vote for it in the first place are telling the Speaker they don't feel comfortable voting for it when they just spend the money. It's the same principle, it's the same limits. And so they're going to need a lot of Democrats to get it through. The Republicans had proposed a number of riders. These are policy provisions that provide that an agency's money may not be spent on certain things. Usually those things are things Republicans think the president should not have pursued. But most of those riders, I am told, have been removed. And the reason is that otherwise the spending bill wouldn't pass because Mrs. Pelosi refused to agree to the spending bill unless the riders were dropped. So we expect a lot of those riders are going to be gone. But it also looks like Mrs. Pelosi used her political capital mostly on the spending bill. She seemed to reach the conclusion that the president really wanted the bigger tax bill, and so she didn't have a lot of influence over that. The assumption is the tax bill is likely to be carried on Republican votes, exactly the opposite of the spending bill. There are 245 Republicans in the House of Representatives. The majority has 218. They could pass the tax bill without any Democrats, but they probably will lose some Republicans because of the cost, and so they're going to need some Democrats. So the assumption is a lot of Democrats on the spending bill, not many Republicans, and the exact opposite on the other side when they get to the tax bill. Now, the assumption here is the House might be able to vote on this on Thursday, send it to the Senate, and then the Senate goes through complicated procedures that allow members to talk, and it's very slow getting things through the Senate. Ideally, Senator McConnell would like to have this done by Saturday. It could drag a little longer, but I tell you the members don't want to be here. So often what happens is the members give up their objections because they have family members wanting them to come home for the holidays, and they get a little tired of being here. So I think all of this could be done by Saturday. Now, until the members see these bills, their support is untested. They haven't seen the details. They only know the parameters. The leadership, I think, feels fairly comfortable by where they are, but there is a possibility that the tax bill, at whatever size it is, let's say it's $600 billion, will be more than the membership can take. And as we have seen often, talk radio takes over and starts attacking something, and it's very possible once the tax bill is out that very conservative talk radio will say these are huge giveaways to global companies, very expensive. They're not paid for, which means that whatever the cost of the bill is, it will add to the national debt over a period of time, and there could be a firestorm against it. If there is a backup plan. The backup plan is the Brady bill. Kevin Brady is the new chairman of the Ways and Means Committee. He replaced Paul Ryan in that capacity when Paul Ryan became Speaker. Brady introduced this about 10 days ago. It extends all of the provisions for 2 years. In the case of WOTC, it adds the long-term unemployment provision, the new category, so that's a very good result as well. And so if the leadership senses when they go to the floor on the tax bill that they do not have the support, they are likely to pull the larger bill, which I caveat we have not seen, but they're likely to pull it if they don't have the votes and use Brady as an alternative, and that most likely would pass. It costs $97 billion, so it's much less expensive and might be easier for people to accept. So that's where we are at the moment. We expect to see text of these bills possibly this evening. It really depends on whether some of these last-minute disputes are being resolved, but once they are, they're going to post them on they will put them on, if you're looking for it, there's everything in the House of Representatives has to go through a Rules Committee, and the Rules Committee, when they are ready to begin the process of bringing a bill to the floor, will post that bill on their website. We're looking for that later tonight, and then we'll have a fairly good idea of what they're really going to do. But anyway, that's where we are. It is one of the more significant extender bills in a long time because, frankly, most of these bills have simply extended everything for 1 or 2 years or 18 months. And for the first time, we may be looking at multi-year extension. But anyway, that's a summary of where we are at the moment.
That's a great summary, Evan. Thank you. And let me just remind the audience or tell the audience that they can use the chat function on the GoToWebinar application and send me questions that I can pose to Evan. So if you have any questions, please type those in. I'll try and get to them as I see them. So again, on the timing, the expectation is that tonight we would see the details of the theoretical larger bill, and then that would give us a pretty quick idea of the tolerance that folks have for that.
That's correct. I think members haven't seen the bill. They've talked about it in theory. They don't know what the details are, and often there are things that go into these bills that can make members upset or can make them happy. For example, we believe in the tax bill that there will be a 2-year delay in the application of the so-called Cadillac tax under the Affordable Care Act. This is a provision that imposes a penalty on very rich health care plans. The idea was to use that penalty to encourage employers to not make their plans too expensive. It's very unpopular with unions, and so there was a vote in the Senate last week to eliminate this provision, and the vote was 90-10. However, the vote took place in a piece of legislation that also repealed the Affordable Care Act, so it wasn't going anywhere. But it showed the Cadillac tax was very unpopular. So there's likely to be a 2-year delay on the Cadillac tax and a 2-year delay in what is now the effective excise tax on medical devices, both part of the Affordable Care Act. Those will be in there. From the standpoint of Democrats, the Cadillac tax delay will be helpful in potentially getting more Democratic support. And there may be things in there that people won't like. We just don't know. So there's a process here of briefing the members and then taking their temperature and seeing where they are. I would also mention I've talked a lot about the House of Representatives, less about the Senate. I think the reason is that we have gone into this process over the last few weeks feeling that there was most likely 60 senators, which is the magic number to get things through the Senate, in favor of this larger process and in favor of the spending bill. We don't really see that many problems in getting this through the Senate. The House has been where the real issue is. So the real test is going to be when Speaker Ryan briefs his members this evening, what sense he gets of where the members are on this.
Great. And you alluded to this before, that I've seen some very recent news articles about opposition from congressional Democrats, Nancy Pelosi and Steny Hoyer in particular. And then you explained that the tax bill will basically be able to be passed without their votes. To what extent does that opposition in the House, amongst the House Democrats, affect the Senate Democrats, and then even more so the White House?
Well, I think it's an interesting question. I think what actually happened here was that Mrs. Pelosi broke with the White House on this. I mean, normally she and the president have been pretty close on issues, but she gave a press conference Friday afternoon as she was preparing to leave town, and in that press conference, she was asked if she said she was pleased how the spending bill was going, but she was less so with the tax bill, and she didn't support it. She was asked if she was in the loop on the tax bill, and uncharacteristic of Mrs. Pelosi, she said she wasn't, she didn't want to be, she wanted nothing to do with it. She was asked where the president was on it, and she said she hoped that he would share her values, and her concern is that she feels the tax bill is too weighted towards business and not enough towards individuals. She had made some suggestions to create what she felt was a greater balance, including putting in an indexing provision for the child credit, so the amount of the credit would increase as inflation increased, and that was rejected in part because of its cost, which was $75 billion. So she said she hoped the president would be with her, but she wasn't sure he would be. She was asked about Senate Democrats, and she said they're going to follow their own path. So she was sending a signal, I think, that she had exercised all of the power and influence that she had over the spending bill, where she had tremendous priorities and wanted to knock out the riders, but had found resistance on the tax bill because the president was willing to make a deal, and Republicans were willing to make a deal. And after all, we have Republicans majorities in both chambers, including a very significant Republican majority in the House, where you do not need a supermajority, you need a simple majority. So to the extent that she's very smart, she knows how this place works, to the extent that she figured out that she couldn't win a battle on the tax bill, but she could hold up the spending bill, she went after the spending bill and got things done. So I don't think her opposition and the opposition of other Democratic leaders in the House is going to make that much of a difference to the overall result. I don't think she's going to lose a lot of Democrats on the tax bill, by the way. She tends to hold people together, but she may lose a few. But in the end, she's on this one, she's in a different place than the president is.
And the Senate Democrats as well.
Yeah, the one thing that could turn out to be a huge problem here are the compliance issues for the earned income tax credit. That credit is important to a core part of the Democratic base, and if Republican proposals are too onerous, if the penalties for double counting are too tough, or if they propose things that could remove people from that credit and a firestorm builds over that, that alone could actually kill the larger tax bill. My understanding is they're still working it out. Speaker Ryan said earlier today he wanted to have a anti-poverty program this spring, a legislation to try and move more people out of poverty. He believes WOTC is one such program. He's very supportive. But I think in part he's doing that to take some of the pressure off what's going on right now and to say that if we really want to look at better compliance in the ITC, why don't we wait until the spring and not get in the way of the process right now.
Great. What do you think are the odds that if this larger deal in fact does blow up, that the Brady 2-year bill will be the default fallback position as opposed to what happened last year with simply a 1-year retroactive extension?
Well, I think the likelihood is it will be 2 years. Both Brady and the chairman of the Senate Finance Committee, Senator Hatch, have said that they never want to see a 1-year extension happen again, and I think they mean it. I think the biggest proponent of a 1-year extension actually has been the White House, not because they want it, but because they have a concern that if they went for a 2-year extension for most things, which would take us 2015, 2016, that Republicans wouldn't want to negotiate with him at the end of next year. So the only juncture he had to get his social programs extended was now, and he's using the leverage he has today. But the White House was concerned if they give in to 2 years, the White House didn't get anything back, that if they went to the Congress after the next election in the lame duck session, late November of next year, the Congress would say, we're not interested in negotiating with you. And that would be especially the case if a Republican won the White House. The attitude would be the provisions are, the tax provisions are good and through the end of 16. We'll let them expire, and we'll have a debate on them in 2017 on our turf when we have a Republican in the White House. So the White House was basically saying, give us everything we want or you only get 1 year. That is an unfortunate situation to be in, but I don't think the president's going to get that for two reasons. One, I think the larger bill is now more likely than not to happen, but also if there's a default, I don't think the Congress is going to give in to 1 year. The president's going to have to live with that reality, I think.
So you just said that you think the larger deal is more likely than not to happen, even given those caveats that you gave earlier. That
based on things we're looking at right now and what seem to be based on a number of things. One is fairly optimistic projections from the Senate that we're seeing, and then also what looked like Nancy Pelosi's default on Friday, where she basically said, "I think this is going to happen, and it's going to happen without me." That tended to be positive as well because it suggested the dynamic of Democrats taking a major role in the spending bill and then letting the tax bill happen even though they don't particularly like it. And they don't have a majority. You know, at the end of the day, if you don't have a majority in either house of Congress, your ultimate place you go to stop something is if you happen to have a president from your party. But if the president from your party is willing to deal with the other party in the Congress, then you have nowhere to go. And I think Pelosi found herself in that position, so she figured she'd use her leverage where she had it and then drop her opposition to the tax bill. So I think that's where we are. But yeah, I would caution, we haven't seen the text of the tax bill. We don't know everything that's in it. Everybody's guessing right now. The one thing I have really learned about this process is that it's being negotiated by a very small number of people locked in a room that we can't get into, and most of them are sworn to utter secrecy. There's an occasional leak, but you can't be sure. So people who are in the room, when you ask them or you get a hold of them in an email and you say, what's going on, they'll say, I can't tell you, but by the way, don't believe the rumors until we're done. So I'm very cautious about it, but I think they're getting close.
Sure. One of our attendees is asking if we could review in the larger package which things we think would be permanent,
right,
and which would be 2-year.
Again, with the caution that things can change. I mean, bear in mind, I also mentioned they're trying to go from a larger package of $700 billion down a little because they think 700 is not easy to sell. So some things could, in the last minute, be changed. And also, you have the number counters, which are the economists from the Joint Committee on Taxation, trying to figure out how much they think these things are going to cost. If they reach a point where somebody says, okay, it's too big, take 50 billion out, then things will get cut back, which is why we're always careful. But with all that as a caution, things that are probably permanent on the tax side are the research credit and Section 179 expensing. On the individual side, the changes that were made in 2009 to the earned income credit, the child credit, and the American Opportunity Credit potentially could be made permanent. Those are the permanent features. The 5-year basket could be the international provisions, which is the look-through rules and the active finance exception, and then WOTC, we think, and then bonus depreciation, but bonus depreciation with a phase-out. So it would be 50%, 50%, 40, 30, 20 in that 5-year period, and then it would be gone. And WOTC would not be phased out, so its value would be the same throughout the 5 years. And then there is a credit for the production of wind energy. It is extremely unpopular with Republicans, and I think it probably would also get phased out under those circumstances, or at least I think that's what they want to do.
And a couple of other credits like the Federal Empowerment Zone and Indian Employment Credit, those would probably be in a 2-year.
2 years most likely. Everything's going to be either permanent, that's a small number of things, then a small number of things go into what they are calling the 5-year basket. Everything else is 2 years. As far as we know, WOTC would also have the new unemployment, long-term unemployment category. That was done. A huge advocate of it was Senator Rob Portman of Ohio, and our understanding is Senator Portman actually called the Speaker and told him how important it was to him, and the Speaker was all for it. So it is likely to be in there as well.
And I think it's important to note on the Brady bill, which could be the fallback if this doesn't work out, it's not simply a 2-year extension of things as they are. It also includes that additional WOTC category and some important updates to the R&D credit.
That's correct. That's correct. In the current Brady bill, that's where they are. And, you know, we're running out of time in the session. So if in the next 24 to 48 hours, the Speaker discovers that he can't sell the bigger tax bill, if that happens, then they probably just take Brady and move it along. What I understand from the Senate side is that Senator McConnell's #1 goal here is to get out of Dodge. He's more focused on the next election than most other things. He would like to preserve a Republican majority in the Senate and elect a Republican president. And he has said time and time again that controversy right now doesn't help. He doesn't want a government shutdown, fighting over things. So his attitude last week was if they needed Mrs. Pelosi's votes to pass the spending bill and she wanted to take the writers out, he was fine doing that. Because he's a realist and he doesn't have all the power. So if in the end we come down to the last day, they can't sell the tax bill to a majority, and the Republican leadership will probably say, well, let's do Brady, and it'll just go.
And for the R&D credit in the Brady bill, as I understand it, the changes would be extending or expanding the alternative calculation method from 14% up to 20%.
That's right.
And then also allowing smaller businesses to offset their AMT with that credit and
Correct.
even payroll tax.
Correct. But on the that's correct. And the extension is only 2 years in the Brady bill. Nothing goes beyond 2 years in Brady's bill.
Right. Yeah. Nevertheless, those are some big changes to the R&D credit. Correct. This debate about the cost of the larger bill, the $700 billion, it seems like that's a bit of a strange argument or a strange problem, because in the normal course of business, with extenders being done every year or so, that's going to be baked into the cost of the government in any case. And this, by just doing it with some permanency and some 5 years, that just brings all the cost into one moment. But really, the cost exists in any case. Why is this cost issue being treated as such a big issue?
Well, yeah, I would tend to agree with you. I mean, Republicans say that because Congress is likely to extend these things year in, year out, whether they do it going forward or they do it retroactively, the practical reality is this is part of our permanent policy, and the cost is going to be there no matter what, so we shouldn't be shocked when we suddenly have that cost. It really is one, it's the way the federal government accounts for things, because if they're not extended permanently, the baseline for federal spending doesn't include it. So when you do extend it, you add debt. Even though it's debt you would have added anyway. You know, it's like basically saying, I have an old car and I don't have car payments. I know I'm going to buy a new car next year and I'm going to have car payments, but until I actually go and do that, I don't have those car payments and they're not in my budget. Even though you know you're going to do it, and even though you know you're going to have the expense, today you don't have it. That's basically how we budget. And Republicans say, let's be realistic. We're going to have those costs regardless. The other reason the reason for doing it over 10 years, part of the Speaker's reason for doing it, is that the provisions he's making permanent, the R&D and small business expensing, are expensive. They will add probably $250 billion in cost. That additional cost reduces the amount of money raised by the tax system, which is why he wanted to make big things permanent. Because in tax reform, the baseline is whatever the assumption is that the new tax system won't raise any more money than the old one. And so he wanted a baseline that raised less money because it's easier to have a lower rate. He is not by any means guaranteeing that things that are going to get permanent, or that things that they're going to have 5 years or even 2 years are going to survive tax reform. He's using it to change the accounting for the baseline for the tax system. But it is entirely possible as we get into tax reform And I think there'll be a lot of work on tax reform next year. Probably won't be enacted, but a lot of the groundwork will be done. I think in tax reform that we will get back to the question of whether you need tax expenditures or certain tax expenditures when you're getting a lower rate. Does the rate make up for the expenditures? One of the good things that has happened with WOTC this year is because of a number of things we did, including what the Capelli studies, and analyzing what it really does to save money to move people from welfare to work, is that Speaker Ryan, I think, has begun to realize that WOTC may have a role to play even in tax reform, that it's one of those provisions you may want to keep. And so that's been a very good thing.
And what happens to a credit like the R&D credit if it's made permanent? What happens to something like that in a tax reform context?
Well, we don't know. I mean, there's no promise that if it's made permanent this week, that in a year and a half from now it'll be kept on a permanent basis. It could be changed. You know, all bets are off in tax reform. If the idea is to completely rewrite the Internal Revenue Code, then everything that existed prior to the rewrite is on the table. And it could be changed. It could be eliminated. Not clear at all where they would go. But on the other hand, having them permanent, it facilitates what Ryan is doing from an accounting standpoint. But everything would be up in the air in tax reform.
Right, of course. Very interesting. So I'm not getting any additional questions from the audience. So folks, if you have any last questions, please send them to me now. What we will try and do is to send out an email to the attendees that, assuming we get the language of the larger package this evening, we'll put together some kind of a summary and send that out and try and keep you posted about the evolution of events here. And if you have any questions that you didn't think of now, you can certainly send them to us here at Tax Credit Co. Through our website, and we will try and respond to those and get you any of the information that you need. Any closing remarks from you, Evan?
No, let's just wait and see what happens. We may just be a short time away from knowing exactly what they're doing, and obviously we'll get something out from here and let everybody know.
Great, and I again really appreciate your time today, and look forward to speaking to you soon.
Okay, thanks, Max. Bye, everybody.
Thanks. Bye.